Okay guys, welcome back to another Bitcoin video update. This is going to be following on from yesterday's video. So what we recorded yesterday's video, we were talking about a move to the upside. And you can see that we were fighting this area of the 200 hourly EMA. Now, if I turn this on, we'll just play a few of these candles. You can see that we did actually get rejected here briefly, but we did move up a little ways here. We actually started to see rejection on the 50 EMA, the 50 SMA, but we rallied right up into our target range here. Now, we have actually exceeded a little bit higher than we were initially thinking with this wick, just as you can kind of see, and we have started to consolidate right down into our expected range. So we saw good growth yesterday, right? So our kind of thought process here was very much that we'll be looking for a bit of a move to the upside, and we saw a 3.1% growth on the 1 hour time frame for BTC. Our range of expectations was this one here at 43,045 to 43,287, but we did actually over exceed this with this wick at $43,432. So what does this mean? Well, it means that we probably still have a little bit more to the upside to go, and we should probably be expecting, a bit more growth in BTC on the 1 hour time frame before we kind of continue our moves back down. Ultimately, if we throw on our smart money concepts as well on this 1 hour time frame, you can see that there's a fair value gap down towards our 200 hourly EMA. So we're talking, 42,322 for the EMA, and we are talking about the fair value gap being right here at $42,294 to $42,516. So for Bitcoin on the kind of the 1 hour time frame, I'm still expecting a lot more volatility. This is to basically mean that we're going to see price move up and price move down, and we're going to see a lot of liquidations for retail investors that are simply just gambling on the market and not using the probabilities of the market to their advantage. So if we come back down into our 1 hour time frame here, and by the way, guys, this is Bitcoin paired up with USDT on the 1 hour Binance chart. I'm going to go ahead and draw a trend line in here, and we're going to draw this across. You can kind of see that this is probably going to be the upper area that we're likely to test. And so if we start to think about over the next few hours, maybe $43,500 is the likelihood before we start to move on down. Now, we can see on the momentum indicator down on the stochastic RSI, it still has momentum to the downside before we kind of think about a shift back to the upside. However, we can see a few kind of crosses with the yellow line being the stochastic RSI and the white line being the average of K. We can see here that we're crossing quite a bit. So this shows us that actually momentum is shifting around quite a bit, even though we're correcting down a little ways here on the stochastic RSI. So potentially maybe we'll come down towards the 50 EMA, find that as support before we rally back to 43.5. So I guess to kind of summarize this in a really kind of clear and easy way for people to understand, I expect a small move to the downside, a small move to the upside, and then kind of bigger rejection afterwards. That would be my expectation. Now, if we can, of course, rally higher than 43,882, then that does change things. That gives the bulls a little bit more power to the upside overall. Okay, so that's the swing high that you can kind of see on the white line here. Now, if we take off the stochastic RSIs and throw on the divergence indicator, you can see that the RSI, which is the yellow line flowing through here, is still above the midline. It actually shows us with momentum shifting downwards a little ways, but we still are in bullish territory. We're above that midline, basically meaning that we still have some progression to the upside. Although we are, of course, looking for this move to the downside on the hourly RSI, there isn't any divergences here to kind of give us any kind of major indication of bearish or bullish. So I think for now, we're going to kind of call it neutral on our RSI kind of point of view. But taking that off and throwing volumes in, you can, of course, see that this move to the upside that we said we were expecting yesterday was pretty decent, a 3.1% move to the upside. But the volume profiles are actually decreasing during this move. That basically shows us weakness to the upside. So whereas we can see, kind of see, 43.5K testing this low trend line, it isn't really something that I'm expecting to be broken, as there isn't really a lot of strength in those moves to the upside. Ultimately, volumes are low, and so as such, we should be expecting momentum to kind of represent that lack of volume and demand to the upside, i.e. we just move on back to the downside. Now, obviously, the 200 hourly EMA is going to be the main area of focus. This isn't only a focus because it's a trend filter. as you can kind of see, we were kind of trading just below this briefly before breaking up above. What we need to do is we need to see tests of this, or at least the bears will want to see tests of this 200 hourly EMA. And they want to see it get broken, retested, and then rejected. And that's going to give you kind of the idea that we are likely to see more significant moves to the downside on the smaller timeframes. Now, of course, these are the smaller timeframes. You can also take a look at it on the 4-hour timeframe. You can see support was found on the 54-hour SMA. And of course, we are looking at $42,500 realistically for a 204 hourly EMA to be retested. So, it's possible that support is found down here. And we just have to have a little bit more of a move to the downside before rallying back up. I am, of course, not looking at this recent move as a strong one, though. We kind of topped out at 43,882, as you see up here, and we got rejected all the way down towards 41,880. This bounce to the upside could just be fueling us more of a move to the downside overall. Now, if we zoom out of this just a little ways further, you can, of course, see that this move to the upside is... yeah, it isn't overly that impressive. Obviously, it is from a fall from the 48,969, where we did actually breach the low of 40K going down to 38,555. Now, for that move in itself, I think this is just a relief rally of that continuation. What I mean by this is that we have a structured move coming down here to 38,555. We have a kind of relief rally going up, only to then come back down and head down more towards $35,000. Now, that's not something that's going to be instantaneous. That's something that's going to take some time. It's not going to be happening overnight or anything like that. We are talking potentially weeks of kind of price action before we see those things. And if we bring this up into our daily time frame, you can kind of see that a little bit more clearly. Ultimately, we are finding support at the moment on the 50 SMA at $42,879. And my expectations will be that this will get lost and we'll lose the 50 EMA also as a support level as we move on down. As I said, right, we're heavily overbought on our daily stochastic RSI. We'll be looking for this to be a 3-wave move. Now, it's possible that we rally up higher. I'm not too fussed about that. And I do see potential for Bitcoin to kind of come up more towards this little area here of 44,946 to 45,879. This is the thought process that I had weeks and weeks ago, and the most recent price action has me a little worried that we are not likely to get there. But this is the area that I've always kind of thought about as the main area of resistance, where we are looking for this relief rally to push up to and then get rejected from, taking us down towards that 35K, right? That's going to be a nice 3-wave pattern from an Elliott wave theory point of view. Okay, so that'll be kind of nice kind of continuation, kind of see that done and dusted. Also finding support on the 200 daily EMA, right? That's going to be that kind of scenario. Throw smart money concepts into the mix here. You can see that at the moment we're finding this premium area of resistance, and that's kind of where we're currently getting rejected. This is actually a little bit short of my expectations around that kind of $44,000 to $45,000, and so this is actually now making it a little bit more difficult for us to see the potential push to the upside on a BTC. Now, I'd still like to see 44 to 45K before we kind of cool off. But if we do cool off from here, I also think that is quite reasonable, and we can see pretty decent corrections to the downside from this range as well. So I guess for the most part is really don't want to be going long. I think if we were to go long on the market at this point, it's going to be incredibly high risky, a lot more risk involved in going long. I think the better and more safer plays, if you want to call it that in crypto, would be to go short. I've obviously been short on Bitcoin for quite some time. I remain short on Bitcoin, and that is not changing anytime soon. The only way that I essentially get stopped out is if we actually hit a new all-time high on my short position. So I'm just going to hold that because I do believe in the longer term view of 30K Bitcoin. Maybe 35 will be a nice strong bounce to come out of that short and re-enter at a later stage. But ultimately, I think going long on the market is going to be a lot more riskier than going short on the market on the daily time frame. Obviously, smaller time frames are a different thing, a different beast altogether. There's lots of opportunities to come in and out of positions, but on a kind of macro level daily time frame, for example, I think short is the way to be, not long. But of course, I am no financial advisor. I cannot offer you financial advice. All I can do is give you my thoughts and opinions and share my thoughts and opinions on the data in the charts as I personally see it. And you can do with that information as you see fit, maybe even consult your own financial advisor if you have one. So for for the most part, that's my expectations. Of course, I'm short on the Bitcoin on a macro scale, and I'm short using BitGet because BitGet is my go-to platform for leverage-based trading. There's a link to BitGet in the description below if you haven't yet signed up to BitGet. I do urge you guys to check it out. It's a fantastic platform. As I said, it's my go-to for leverage-based trading. So I'm short on Bitcoin via BitGet. Yeah, there you go. So anyway, moving down, you can see that this range down here between 35,700 and 37,653, this is the area that I'm looking for. Obviously, the 200 daily EMA sits at 36,051, and we have equilibrium. I'm not sure if you guys can see that. Right down here is equilibrium. Equilibrium is the 50% level between the premium and the discounted ranges on the smart money concepts side of things. If I zoom out of this just a little bit, you can see down here we have a discounted range, and up here we have a premium range. And the equilibrium is a 50% level between the discount and the premium. And essentially what that tells us is that this is going to be a really strong area for support. Now, it's no coincidence that this range of interest, a fair value gap, sat between 35,735 and 37,653, also happens to be this area of consolidation, and also happens to be this area of equilibrium, and also happens to be the range of the 200 daily EMA. What do all four of these things tell us? It tells us that this is a likely range for support. This is where the buying pressure is going to be. We could also throw on the VPVR, and you can see that there's a lot of volume in this range as well. This tells us that the 200 daily EMA is likely to be support. It's likely to fill out the fair value gap down at this $35,000 to $37,000 range. It also tells us that equilibrium is also likely to be a good area of support, as this was a previous area of consolidation and where a lot of the volume profiles are. This is a huge point of interest, and therefore I think is a high probability of revisiting this range. Now, as I had that VPVR on there, you can see as well a lot of volume profiling right in where we are at the moment. This is also an indication that the market is likely to swing heavy from where we are. So we want to keep a close eye on all of those things. All in all, I think for the most part on the macro timeframes, we need to kind of be considering more of a move to the downside than to the upside. But I do want to also just bring into view here the stochastic RSI. We can see got plenty of room to the downside. We can bounce around a little bit more to the upside before we drop. Of course, we can kind of see here the yellow line just turning up a little bit, potentially looking for a bullish cross on the smoothing average of K. If I take that off and throw on the divergences here, you can see that we do have the RSI above the midline. Again, we've got plenty of room to the growth to the upside. So again, it's possible that we move up a little bit more before we move on down, as that does align to what I was talking about with the hourly chart as well, right? That 45K area is still an area of concern if we can push, of course, a little bit higher to the upside first. But for the most part, my expectations will be that all in this range here, whether we can push up to 45 or not, is likely to be the area of reversal. It is where I'm looking for moves to the downside, and why I am slightly more bearish on BTC. Now, ultimately, guys, as you know, I think crypto is a long-term play. I think ultimately this is going to be a fantastic space to be in, and it's great to have exposure to it. But obviously, it is slightly higher risk. With that risk, there are strategies that can be employed to minimize your risk. So why not check out this video here, where I'm talking about the importance of onboarding and offboarding fiat onto cryptocurrency exchanges without putting yourself at risk from the banks freezing your assets and closing your accounts down. Very important. Check it out, and I'll catch you in the next one.